Welcome to Buy, Hold, Sell. My name's James Marley. I'm joined by Roger Montgomery from the Montgomery Fund.
James.
And Steve Johnson from Forager. Steve, I'll start with you. Recent reports, COCHLEAR, PF 36, looking expensive after it cracked through the $100 mark.
Always looks expensive, but it's a wonderful business. It's still too expensive for us, but I think the result was another good one. It's probably not growing at the sorts of rates that get me comfortable about that type of multiple. So I would say hold it if you've got a big tax bill there, sell it if you don't.
Roger, buy, hold or sell on COCHLEAR?
I agree absolutely with Steve. The tension there, of course, is that the business has this wonderful optionality from the internalisation of the COCHLEAR device and the possibility of wireless upgrades that people will pay for in the future. But at the same time, there are diminishing returns to R&D because they've now got pretty much 100% sentence recognition and almost zero failure rates. So you wonder how much more can they squeeze out of the lemon, if you like. It does seem a little bit expensive now, and you have to justify it with very, very high expected returns on equity, which we just think maybe not sustainable. So we'd rather be buying at a cheaper price. So for us, it's actually a sell at this price.
It's a sell, okay. ANSELL, it's down over 40% since April last year.
Yeah, and deservedly so. It's a business that has very high levels of debt, single-digit returns on equity, and really, while there's always hope that they're going to extract some synergies from scale, because they're always suffering from various currency movements, it's very hard to see the prospects for this business as an Australian owner improving.
Sounds like a sell?
Yeah, sell.
Steve, latex seems like it's something that's always been in demand. Buy, hold or sell?
I think there's a good business in here that they're doing their best to obscure with capital allocation decisions that haven't been great. And there's been this focus on growing the pie rather than focusing on the bits of the business that are good. I think there's enough in there to potentially be a private equity takeover, potentially be bought by someone overseas, potentially just fix their problems and get on with running what I think at its core is a good business. For me, there's enough value there, enough of a business there to say hold. We don't own it, but we're doing more work on it. So it's on the better side of hold for mine.
Okay. JB HIFI, the competition might be thinning out a little bit, but the growth options may be a little limited. Buy, hold or sell?
I've underestimated this business for a long time. I don't think the price is too demanding where we are today, but I do think it's getting very big. And one thing we really focus on, particularly in the Australian market, is this business has grown very well for a very long time. It's now a very big portion of its market in Australia, and I think there are limits to how far that can go. But the price is not demanding too much in the way of future growth, so I would say hold.
Roger, JB HIFI, the growth options there for you?
We have a hold as well on JB HIFI. Reason being, as retail businesses mature, they become more cyclical. Better to buy, in the depths of a recession and when there's blood on the streets, retail businesses like JB, rather than when everything looks fantastic and people are pricing it for perfection. We don't think that it's fairly priced. We think it's on the expensive side.
So it's a sell?
It's a sell.
All right. Let's get some ideas out of you. Roger is the one that you think that does look good at the moment, that has reported well.
Yeah, so that's ALTIUM. ALTIUM is a business that actually has built some software that helps electrical engineers make circuit boards or print circuit boards. They've just done a deal with Dassault Systems that provides a software package called SolidWorks, which is used by mechanical engineers. The idea bringing electrical engineers and mechanical engineers together. Putting all that aside, that's blue sky and upside. The business is growing its subscriber base in high double digits. Revenue is up 19 or 20%. EBITDA margins of circa 30%. And it still looks a couple of dollars cheaper than what we think it's worth. So ALTIUM's a business for us.
Okay. Steve, is there a report that stood out for you?
The best result I've seen is DOMINO'S. We don't own the stock and we've never owned it, unfortunately, but I just can't believe they can keep getting double-digit same-store sales growth out of pizza shops, and they just keep coming out with new technology, and they've shown that you can build a technology business in a space that I don't think people historically thought of as technology. So kudos to them, they've done an amazing job. The price is too much for me, but best result I've seen. In terms of our portfolio and opportunities, we own a little company called ENERO, which has been through hell and back. First result we've seen from them where they have shown that they've really turned the corner. They own a couple of UK businesses that are growing quite nicely and healthily, and we think those are worth more than the current share price alone. Massive big franking credit balance and a bit of cash on the balance sheet. So finally turned the corner, and Matt Maluish, who's running that business, has been slaving away for a long time trying to turn around a very difficult business, and some signs of growth there. So in terms of our portfolio, that's been the best one so far.
Okay, well there it is, a couple of ideas in the midst of reporting season.